just want to double check and make sure that it's running. All right, very good. All right, so first of all, welcome. Today is August 25th, which happens to be my son's 30th birthday today. So I don't know how on God's green earth I have now my youngest son had his first grandchild, or my first grandchild. I got a 30-year-old kid, and I don't even feel old. So anyway, happy Friday. Going to be a good day today. We're going to, I really gave a lot of consideration into what I was going to say, how I was going to say it, and in the end, it's all the same thing, over and over and over. Literally, I go back and I look at rules that we did back in, 2014, 2004, and nothing has changed, guys. The market goes up, the market goes down, buy or sell pullbacks, and that's it. And, again, there's a lot of different ways to twist it, but in the end, there's only really one thing. You need a couple. I had this conversation with somebody the other day. I said, you need one or two good trades, and that's all you need. And you don't need a lot of trades. You don't have to catch every trade. And PFI, going back to your picture, let me pull it up here just real quick so we have it in the room. What you were saying is a lot of times momentum is so strong that price never pulls back for an entry. The question is, what happened over here? Hopefully you guys can see my mouse okay. What happened over here, because this is where the entry would have happened. And this is the point at which you're still in your trade and hoping that you make it to a fib. So again, you don't have that picture down here in your chart, but the entry was probably way down a lot lower. And this is more continuation to the upside. And again, some people will take a market flow signal if, especially if there's like one-to-ones. You see these little pink one-to-ones? I know they're probably a little bit small in here, but, some people will take the pink one-to-ones, and if you get a little momentum trade through the one-to-ones, they'll use those as an entry. So that's one way of doing it. Look, let me go back real quick. And, again, I want to show you guys something. And I've done this a lot over the years, and I pretty much do it every time I run the room. But, it's very interesting. In the year 2003, 4, 5, when we were really putting together all the rules, one of our rules was we had a momentum trade. We call it trade number 7, funny enough. We had about 7 different trades. And it's a momentum continuation. And the trade was taken when you break or violate a one-to-one. So again, PFI, I want to tell you that this concept, look, it's 19, 20 years old. But when you have strong momentum on your triggers and you break through one-to-ones, a lot of times it keeps going. And you'll see that happen. Look, here it is this is NASDAQ live. Same thing here. As you break through the one-to-ones, they kind of become support for us, and, you kind of get that momentum up to resistance. So that kind of, that plays in line with what you were looking at over here is, you didn't have a rule that, you wanted to buy the mid band way down here, but the momentum was such as you got through the one-to-ones that probably weren't coming back down. So that's an alternative entry. And again, when you guys, there's, one of the things that I think whenever I run a room and I give you guys an alternative entry, at least 30 or 50 people blow out their Apex trading accounts in the next week trying to do some of the things that I've shown them in the class. So, again, if you learn something new, don't trade it with your live money or your live Apex account or even your test Apex account. Trade it on Sim for a while and just get used to the trade. Any new concept that you put out for yourself. Let me give you an example. I've added a new concept for myself where I have added a third faster trigger to my market flow chart. And again, it's not, and I'll tell you the purpose of it first. The purpose of it is at tops or bottoms to be able to try to get in a little bit faster. But it's an 8-3 trigger instead of a 25 trigger. And you'll see it's just a lot faster on the chart. And anyway, whenever I have that trigger line, whenever I get to a good top, let's just say, for example, I get to resistance like this, what I'm looking for is I'm looking for triggers to roll over. And this right here would have been the spot where, if I was looking to take a short trade, I would have taken a short trade because of resistance. Does that make sense? Now, I want to go back before we get into this. I want to show you what I'm going to basically show you guys for your lesson today. And again, look, I'm going to go back to the year 2004 again, because why not, right? We got it right a long time ago. And our rules back then were pretty simple. It was if you hit fibs and you had divergence and the trigger lines roll over, sell a pullback to the triggers. So this is the same concept that we use with the market flow chart. This is the same concept we use with trend trades. It's just the size and shape of the trigger lines are the only difference. The fibs are the same, the mid-band's the same. So the only difference is the speed at which you're going to use the trigger lines. Does that make sense? In 2004, we only had one trigger. There was no large trigger, small trigger. It was just the small trigger. So we didn't have a large trigger. So the only thing we could deal with was one fib and one trigger, and then that was it. There's no Shogun. Your question is the 8 range chart the right chart for the S&P? It depends on your goals and objectives, on what you're trying to do with your trades. Some people like a larger chart. For example, Siva, who's in here now, he uses a 21 range and a 34 range chart. There's no wrong chart. It's just what I was telling you about that little picture. It's a different size, but the looks are all the same. So again, I think personally for crude oil or for the S&P, I think the 8 range chart's probably sufficient. If you want to smooth it out a little bit, you can go with a little bit of a larger chart. Anyway, look, so I want to use that picture that I showed you guys, to kind of go through and, especially for new people, I had a conversation with somebody the other day, Norman actually, and we were talking about, one of the things I think that's maybe more frustrating for new users, as you guys go back and you go through your charts and you're scrolling back and looking through your charts, there's basically one concept you have to get straight. Okay. And that's, what is my area or condition? And then the first sign, just like that picture that I showed you guys from 2004, the very first sign that you're going to get that a top is good, there's two things, right? And it was true in 2004 and it's true today. If you get to a fib and the triggers don't physically break through that Fibonacci area, then the fib area is probably going to hold. And then if the triggers roll from that Fibonacci area, then you can probably go the other way. And again, that concept is, you can use that concept anywhere on the chart. So, for example, we'll look at it here today, okay? This is just this morning. So I'm going to go back to midnight. And again, look, whenever we get to some type of resistance, right? So even a magenta 1-to-1 is a resistance for us. What I want you guys to be able to do look, when you're new to our software, we talk a lot about trend trade, right? And the majority of you guys are waiting for really, really, really strong triggers, which is the right thing to do. But what I want you guys to do is to be a little bit quicker about it. I want you to say if a area holds, regardless of what the area is, whether it's a mid-band or a fib or a 1-to-1, once the small triggers roll over, just like in the year 2004, is everybody okay with this concept? I mean, this was true in 2004 and it's true today. If you hit an area and the small triggers roll over, look for an opportunity. So, whether it's 1-to-1s that hold and then the small triggers roll over, I want you to look for an opportunity. Because if you can get this opportunity to go short right here, does this make sense? If you get this one, then by the time you're over here looking for a trend trade, you're already up a ton of money. And that's really, so I want to slow you guys down, but I want to speed you up as well. And again, you don't ever know which fib's going to hold. We don't have to guess. I want to show you guys how easy the analysis is, okay? When you get to a Fibonacci area, so down here, 2:30 in the morning, if the small triggers roll up, it's probably good. That's all you have to know. So if the small triggers roll up and they get above the large triggers, we'll take a long trade. If they don't, then it's probably going to keep going. And you don't have to guess as to which fib's going to hold. You just have to recognize one. We missed this one by a tick or two, but the market and the trigger lines will tell you whether or not the area is good. Because if you get to an area and the triggers don't get beyond it, then the area is probably good. And the same thing, as long as the small triggers remain up, we're going to keep going long or think about long trades and nothing but long trades. So, I actually made a template where I had taken the trigger lines and I just made the large trigger lines a 1 instead of a 1.9. And let me show you what this looks like when we do it on the chart. And again, I don't necessarily want you guys to change your chart, but it's just going to show you the background color based on whichever way the small trigger lines are crossed, up or down. And there is no large trigger line, basically. I just got rid of it. So as long as the small triggers are crossed up, you're thinking long trades are nothing but long trades. And again, if you get to a resistance, you're not going to go long, right? So obviously, you have to wait until the triggers break above resistance to go long. And again, if you just kind of keep this thing going, as long as, when we get to a resistance, if we break above a resistance, right, the anticipation is that we might keep going up, right, because the triggers are beyond the fib. Everybody okay with this concept? And again, this is small trigger versus fib reading. And that's not everything, but it's the first thing I want you guys to recognize because, here, let me blow this up a little bit. Because when you see it, and look, once the trigger lines roll down, we're no longer thinking long trades. And again, you can think long trades. Look how long you thought about long trades. From 2:30 in the morning the small triggers never crossed down, not one time, until 3:45. So for an hour and a half, it was longs or nothing. And, again, was there long trades to be had on your small chart? We have to go take a look at it, but there probably was one or two in there. And again, if we reach a fib or a mid band, then all we're going to do is we're going to wait for the triggers to roll back up again. And that's it. And again, could you have taken a short trade? Maybe. Maybe you could have taken one little short trade. Now, obviously, if you run into the lines, there's two things you have to say to yourself. Are the triggers past the line in question? So location wise, does everybody understand this concept? Because it's going to make chart reading really easy for you. Just ask yourself, are the triggers below this support? And if the answer is no, then number one, if you were short, you have to get out. And then number two, if support holds and the trigger lines roll up again, then you're probably going to think about long trades again. And again, it's just after the small triggers roll. I know there's not a large trigger here, so, again, we're kind of simplifying your analysis of the market first, okay? So, again, this is all you need to know. Are the triggers below the support? Let's see if I can make that bigger. Watch this. Let's set that as default. Everybody okay with this concept? It's real simple. And you don't know if it's going to hold. We're not here to anticipate whether something's going to hold. That's not where we make our trade. We make our trade after it holds. So we wait for it to hold, we wait for it to roll, and then hopefully we find some type of long trade. And as again, as we progress up, we have to ask ourselves questions, right? So if we get back to support, we ask ourselves the same question. Are the triggers below this support? And again, you can just look at the small triggers first, but are the small triggers below support? The answer is no, they're not. So there's a chance that support's going to hold. And if it does, and the small triggers roll back up, you can start thinking about long trades again. I know it's a little bit of a different concept because you're like, wait a minute. And I just want you guys to go back and study this concept. And that, again, as you start to see it, you're going to be like, oh, okay, I see it. And you'll be getting long a lot quicker than waiting for everything, 17 triggers to roll over. Now watch. The exact same concept in reverse. So I'll just copy paste this. Are the triggers above this resistance? There, how's that? And again, this is how we define what's called a termination condition. A termination condition is nothing more than some line that doesn't have the triggers beyond it. Doesn't mean it can't change, but eventually, if it does hold and the triggers are not past it, once they roll over, look, we're going to start looking for short trades if we can get them. Now, we may or may not get them. And then, again, we get to a mid-band and or support. And you can see we don't have a lot of room until we get to support. So, again, are the triggers below this support? No. So we might bounce back up. And, again, it's kind of a choppy little area here. But this is this morning. And again, we get to resistance and we ask the same question. Are the triggers above this line? And the answer is no. And you get below the triggers. They start to roll down and you get a little push to the downside. And then we repeat the process. Are the triggers below this support? And the answer is no. So if the triggers roll up, we can start thinking about a long trade of some sort. If we get one, great. If we don't, great. Right? And now, we start off, obviously this is a pivot stop out, right? So we have resistance, and again, we don't know if it's going to hold. So yes, the triggers did get above the line a little bit, but they also rolled back down again. So again, with the small triggers rolling down, T, you're asking, do I want confirmation from both triggers? We're not trading right now. We're learning how to read our charts first. Okay? So let's not think trade yet. Let's just think, is this area going to hold? Are we going up or down? We'll leave it at that first, and then we can find trades later. But again, that's the whole point of, chart reading, is to kind of say to ourselves, hey, I want to read the chart first, because look, once you read the chart correctly, everything gets real easy. So, again, look, we have a 1-to-1, and we ask ourselves, are the triggers below the support? And the answer is no. And then the triggers roll up, and then we have to ask ourselves, look, what happened after some support holds and the small triggers roll up? Can you make money with this just by itself in an easy environment? So again, as we get to resistance and it breaks, and resistance and it breaks, then maybe we get another long trade here, and we just start this process over again. So if we hit a line and the triggers roll up, we have to say to ourselves, what's next? It looks really easy, right? I know you're looking for large triggers and small triggers and all these rules and all that, but you have to read your chart first. So you have to have some type of understanding of just up or down first. So here we go. Up at the top. We're going to catch up to live here in just a minute. No, I mean, look, when we go through the user guide, let me start with the user guide first, okay? I'm in an Airbnb right now, so my internet's a little bit slower than normal. So when we go through the user guide, this section right here is kind of where we like people to start. And again, because you have to build some type of framework for yourself to be able to have a reference to the market. So a termination condition is nothing more than a Fibonacci-based indicator that may reverse the market. So blue fibs, red fibs, yellow or magenta dots, divergence lines, maybe even a midband. So these are the areas. No, Abdul, I do not just use a small trigger only. I'm giving you a little lesson on how to read your charts. So when we have a termination condition, right, it gives us a frame of reference for the market. So, when we look at a chart, we can say to ourselves, red resistance, what are the small triggers doing? Are they down? Are they below the red resistance? When we get to a blue support, we ask ourselves two questions. Which way are the triggers going? They're going down, but are they below the support? And it's just a question of, if the triggers are below the resistance and they're going down, you can basically sell the resistance. That's your trade. Okay? If you are triggers going down and you're at support, it's not a trade, it's an exit. Does that make sense? So, and again, if triggers break the fibs and they turn from blue to red, then we can keep going. But if they don't, we have to stop going short. So all we're trying to do is we're trying to determine at what point can we, where are the triggers relative to our areas, right? And again, this is this is a fib, but the triggers were down below the fib, so it's not really a good bottom yet. And then we get a retest of that area, and then we get, that's where this divergence line comes in. And then our triggers are physically above this divergence line. So that's all you're looking for when you're looking for support or resistance. You want some support or resistance, which the horizontal line on your chart, whether it's a blue line, a cyan line, a magenta line, or whatever, the lines that run east to west. Everybody okay with this? And all you do then is you say, where are my triggers? Are they above or below that line? And then once they roll up, you're going to start taking long trades. Yeah, that's exactly correct. So over here on the left, and again, look, when we talk about good tops or good bottoms, not to go too far into this, but again, what we're looking for is here, let me example this a little bit. So look, do you see right here, I'm going to draw in these little yellow lines. The triggers are physically below the fib. So we can't go in and say, hey, this is a really good fib and we're really confident that it's going to go, because you don't really know. So, or watch, let me save this as, let me just save it as a picture. I can blow it up a little bit. So look, because you have to understand, look, when you're in the live market, right, on the right edge of the chart and you don't know what's going to happen. Everybody okay with this? So assuming this is the live market, your triggers are past the fib. So you're like, yeah, that's not really a bottom. It's not going to be a bottom. It's nowhere close to being a bottom. Now, it eventually goes up, which is fine, but you don't know that in the live moment. This is what it looks like live. So that's not a good bottom because the triggers are below the fib. So Shogun, you okay with that? Everybody okay with this? And that's not a bottom that we say, hey, we're going to start taking longs from. Now, later on, look, this is the same thing. This is why we have these divergence lines, and this is why we call it a termination condition. When price gets back to this line, now you can see the triggers are physically above this line, the divergence line. So immediately, once we have price above this divergence line, we're like, hey, wait a minute. Our small triggers are physically above that line. So we're not going to go short anymore. Now, not going short is, again, this is not necessarily a long trade, but it's definitely not shorts. And then once the small trigger, right here, this is the point on your smaller charts where you can start taking long trades. Because if you wait for all these triggers to roll all the way up to here before you take your first trade, you're not really getting the most benefit out of our software. If it's really going to be a bottom, in the more advantageous long over here somewhere, so you can make all that money before the triggers roll. So again, the concept of location of your triggers is very, very vital at tops and bottoms. So it's not just location, but then you also have to wait for price to get above your triggers and the triggers to roll, and then you can go. And, when we talk about what's the first trade you can do, you guys already know the answer to the question. We've given it to you 1,000 times, right? So if you're brand new, look, this is basically the concept of what you're trying to do. So again, this is assuming Fibonacci top, right? As soon as you can define that top as a good top, meaning trigger's not past it, and then once some of your trigger lines start to roll, large chart, small triggers, couple of triggers on your, smaller chart. And again, that's why, remember when I was telling you that I added in a little bit of a faster trigger on my market flow chart, because I'm basically, trying to get set free as quickly as possible at fib areas, which Sometimes bites you in the ass because you're in a little too early. But, again, that's where the speed of the triggers makes a big difference at the areas. So, again, if you have a good area, the faster the triggers roll. If you were to go short the NASDAQ here, you ended up making what? 15, 20 points before everything got strong. So, the benefit of knowing that area and having a faster trigger, that's where this momentum trade or high volume trade comes from. But if you don't read the top correctly, do you understand? So look, if you read this as a good bottom with the triggers past it and you start taking long trades, you end up losing. And then after a good bottom, when the triggers aren't below the line and you start taking long trades, you're winning. So, again, if you do it wrong, you're going to be taking momentum trades and losing, and then you're going to take a trend trade and lose. And then after a good bottom, you're going to already be down $600 and you're going to pucker up and you're not going to take the winners. Right? So again, there's a lot of videos and a lot of work that we do that, in the user guide. And again, we talk about your first 30 days and beyond. It's very, 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 very important that you define a good top or bottom. And that's what this video is about in this lesson right here. And once you have defined a good top or a good bottom, then you pretty much can't mess it up. It's only when you don't have the right top or bottom, you start, getting a little wishy-washy on your trades. All right, so let's go forward in time. What is MF? Well, MF could be a lot of things, PFI, but market flow is, I think, what people are talking about. So again, look, let's go through and this is the NASDAQ. I know it's a little insane for some people in the beginning, but look, let's just use the same concepts, okay? Going forward. So we already had started up here, okay? Everybody cool with the idea that that's a bunch of red lines? And we can ask the question, did the triggers get above the red lines? No. So what happened? It's a good top. And as a good top, as long as the small triggers are down, perhaps you can find a short trade until you get to support. Now, ask yourself the same question. Did the triggers break below support? Yes or no? Small triggers only. That's all we're dealing with right now. They didn't, did they? So small triggers are not below support. So as soon as things start going up, you can start thinking about long trades. Now, was there a long trade to be had? No, it did not. Shogun. Triggers breaking above. Look. So let's define this, okay? You need to have both triggers past a line for it to be broken. Not one trigger, not barely nipping through. Both triggers completely past. So look, this right here, so let's just define this. Okay, this is, okay, Shogun. Let me rephrase what I just said. Both triggers have to break above for it to be broken. So look, right here, do you see this? This is one little trigger above and not one above. So now, after this bar up, we have two triggers above the fib right here. See that? And then later, we actually have two triggers above the one-to-one. So that's a really good breakout to the upside, which usually leads to long trades that have winners. So when we look at the bottom, and again, I want you guys to understand something. The red and blue lines on your chart are not exact prices. There used to be a box where we would actually draw a Fibonacci support window. Like this would have been a box, let's just say, instead of a line. And this box contains lots of different Fibonacci lines that go across and, different values and whatever. And essentially, this is the confluence window. And the blue line is the top or the upper edge of a support window. Now, the support window is not that big. It's only about that big. But just because it's, and that's why you'll see sometimes you'll get a little bit past it. It's not an exact thing. It's an area. Okay. And it doesn't even matter because if it's not red, it's blue, right? So you don't really care. You just know it's blue. And once the triggers roll up, then you know the blue is good. You're not trying to predict what's the bottom. You're trying to say there is a line, and then after the triggers roll up, then, okay, now it's a bottom. And then as we go up, again, we're doing the same thing. It's not that you can't break through and keep going the other way, right? Here, let me try to catch up to live. So this is live. So, look, we'll start up here at the top. That is the starting of a good top. The only challenge is that we also have support that may hold. Right? So we're in a situation right now where we have resistance that may hold and we also have support that may hold. This is live. So again, if we break above and our small triggers roll up, we'll see what happens. But anybody want to take a guess on to where we're going? That's our next spot, obviously. Up. Okay. I like it. And again, look, we're just chart reading right now. You're not trying to trade yet. You're just reading your charts. Now, again, I don't want to go too far into here. Let me do this. I'm going to put the indicators back on the way they're supposed to be. And I'm going to put my large triggers back on. But again, look, the short version is I want you guys to have this lesson. Support or resistance, and then watch what your small triggers are doing. And again, look, I hate the first 30 minutes of the NASDAQ. It's insane. I literally have blown out like 10 Apex accounts in the first 30 minutes of the NASDAQ. And I even told, if you guys are in the trading room, it's like I tried not to even touch the NASDAQ for the first 30 minutes because it's crazy. So if you guys haven't done it, you will, I promise. But it's really, it's better to watch crude oil and the S&P while, yeah. Well, I don't know what it is, whether it's like all the algorithms and whatever they're doing, but, it's just a little bit crazy. And, look, it's just like anytime there's a report out. And we know it's going to be crazy. Like today, there's a 10 o'clock report out. We know it's going to be crazy. You just stay out of the way. All right, so let's do our same analysis on crude oil that we just did on the NASDAQ. Are you guys ready? So we're going to look at support and resistance, and then we're going to watch what the small triggers are doing, okay? So let's go back to the end of the day yesterday, and look, we have support. Everybody agree? Now, we're going to watch our small triggers relative to everything else. So we get up to resistance, and we have a little bit of a hint because we have to ask ourselves a question. Are the triggers past the resistance? And you have to go into a resistance with the anticipation that either it may hold or it may break. Those are really your only two choices, right? It's going up or it's going down. It's going to hold or it's going to break. So when you get to a fib, if the triggers aren't below it, it may hold. If you get to a fib and the triggers get past it, it may break. So since support holds, resistance might break, there's a good chance that we're going to go up. So mid-band holds again, triggers roll up, the market's going up. And again, we're just chart reading, okay? We're not talking about trades yet. Is everybody okay with this little exchange down here? Because I think if we spend more time on chart reading, the trades are so freaking obvious and simple and easy. The reason why people suck at day trading is because they don't take the time to read your charts first and have the correct anticipation of what should happen based on what they're seeing. They just see a trigger going up and they're like, oh, go long. And they're like, why did I lose? Okay, listen to this, Sophia. Ready? If a trigger is past a fib, the fib will probably break. It may break. How's that? So look, that's the whole this is like the most important thing that you're going to learn ever when you're reading our software. Okay, so look, we're going to spend more time with it. If you get to a fib, and we're not talking about trades yet, we're just talking about reading your chart. Okay, so here's your second one. If you get to a fib, is everybody okay with this? And again, I'm not talking about trades yet. I'm just talking about chart reading. Because you have to look at a line on your chart and go, hey, that line's not going to hold. So again, look, you can get back to your mid-band and large triggers and you can say the same thing, right? Is it going to hold? You basically do this on all the lines on your chart. So again, you get a bottom and then you get a higher divergence. And again, these are the things that build, obviously, a good bottom. And then after this little retracement, it's up and nothing but up. And you're looking for long trades. Any long trades you can get your hands on all the way up, you're looking for long trades. But you have to go in with this anticipation of what might happen first. And then, as we go up, you get to a fib and it's the same thing. You read your triggers. And you can basically say to yourself, hey, we get to a fib and the triggers are strong. Strong triggers tend to break things. But once they get beyond it, now we can reasonably say the trend may continue. And it doesn't have to continue, but usually it does. So is everybody okay with this so far? And again, when you go back and you look at your chart and you know it's a bottom, you know the mid-band's probably going to hold. And basically, after this mid-band holds, you're looking for long trades from midnight or whatever last night. And it's basically long trades or nothing. And then you get to a fib and you ask yourself the same question. So look, let's just look at the fib up here. When you're in the live market situation, you have to ask yourself, is this the type of top that's going to be a good top? And you can already tell me right now, yes or no, is it going to be a good top based on our line versus trigger line location? No. Now, it could change later, but right now the triggers are up and they're past the fib. So usually that's when fibs break. The market bounces off of it. So look, these are fibs. See this box right here? This is a blue fib that holds, meaning made the market go up. Right. So now we have triggers that are going up. And then this is the very first time right here where we say to ourselves, wait a minute, we have some fibs, but the triggers are not past it. You see that? See how that changes? So here we have a fib with triggers past it. And then here we have a fib and no triggers are past it. So that's usually what we call what? A termination condition. So this is the point where you stop going long. Now, does it mean it can't break? Right? And it does, and that's fine. It's okay if it breaks, but until it breaks, we can't go long. So again, it stops us initially. And then as the triggers get past the area, usually you get another long trade. And then as the triggers get past an area, usually you get another long trade. Everybody with me on this so far? So again, we're just chart reading. There was literally only one spot where we had to stop and wait for a breakout, and it only took a few bars for it to happen. All right, so now we get to fibs again. And we have to say the same thing to ourselves. Where are the triggers? What's going on? And obviously they stopped. And they broke out. And then they switched back. And again, look, they don't have to keep going. Right? They can break out and you can get a long trade, and you know, sometimes you go long and then you have to get out because of a second divergence or a third divergence. You don't know, what the trading is over here. But again, when we break out, you're going to be compelled to probably take one more long trade, and maybe it's a winner, maybe it's a loser, maybe it's a break even, maybe you lose a little bit. Again, we're not going to go into the trading part of it yet, but again, chart reading. And, again, they just ran it down further. And can we all agree blue fibs, no triggers past it, is a good bottom again. And as soon as the small triggers roll up, you're trying to take long trades. I mean, that's basically what it boils down to. And, this is another instance of that divergence pivot stop out, which is also a spot where we have to watch and see what happens, right? We're not going to go long after that. So if you can't go long and the triggers roll down, can you go short? All right, so we have to ask ourselves, at first we have support. And then did the triggers break support? And the answer is yes. So at the moment, we're leaning to the downside. Basically, it's shorts or nothing, depending on what your smaller chart's saying. And again, as long as we don't break above here, we're going to keep leaning to the downside. So, there's two lines in the sand for us on crude oil. All right, we've got one down here at the bottom, which we'd like to get to. And then if we break out to the upside, then, we'll keep going long. All right. If you guys have questions, again, look, I'm spending a lot of time on chart reading because it's really, 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 really important that you read your charts properly. Once you read your chart properly and you say to yourself, I've got a good top, right? Then you have two choices. Use a smaller chart to get in a lot faster, as close to the top as you can. And then if everything is really going, then you're going to get a trend trade, right? Where both triggers are really, really strong down. And then if you get to a bottom that you can confidently say, yes, that bottom is really, really good and it's probably going to hold, then you can use the smaller charts to get in a lot faster. Does that make sense? So again, you guys right now are waiting for this. In the beginning, you're waiting for trend trades, right? And nothing but trend trades. which is fine. You know, there's nothing wrong with just trend trades. Let's see what our NASDAQ is up to. Kind of grinding around in here. All right, I'm going to put my normal template back on here real quick just so we have it, okay? Chart reading is more than 90% of it. Look, if you don't read your charts correctly, you're never going to win consistently. So it's probably the most important thing you can do first is to read your charts properly. I think when you have a perfect trend trade, I mean, it's pretty freaking obvious, right? I mean, tell me if I'm off base on this when I say it, but hang on a second. I had pulled up the RTY yesterday. Let's go. Bear with me. I made a lot of pictures yesterday, but look, if you guys have this look where it's a perfect trend trade on your small chart, that's not really very difficult, is it? Everybody's okay with that look. I mean, if it's the most perfect trend trade look, then that's fine. I don't think anybody has much trouble with that. The only thing you really have to do is you have to have a good top or bottom before that happens. And again, we're kind of, we're in a really funky spot on the NASDAQ here where they're going to have to make some big decisions. And, again, look, this is a perfect time to not do squat on the NASDAQ. We hit resistance, yes? And there's no triggers above resistance. So for now, that's a top. Now, we also have, some support here, which bounced it up. Obviously, the triggers are leaning a little more to the downside here. But so, again, we've really got to break out of one of these areas because there's nowhere to go. Support may hold and resist. Have you ever guys, has anybody ever asked a question? I wish I knew when it was going to be choppy before it was choppy. Now you know exactly when it's going to be choppy before it's choppy. This is it right here. Not saying it can't break out and just wait on the NASDAQ. It will, but both fibs are supposed to hold based on our trigger line reading. That's the definition of chop before chop happens. And again, with the NASDAQ, you never have to wait long for it to break out. That's the nice thing, and the bad thing maybe about the NASDAQ is very, very quick. All right. Before I go further, let's do this. Okay, so when you guys are looking at trigger lines, two things, right? For those of you guys who are new, when the small triggers are above the large triggers, the background's green. Small triggers below the large triggers, the background is red. That's your first visual clue, because you don't ever want to go long on the big chart when the background color is red. You don't ever want to go short on the big chart when the background color is green. That's the short version, right? You want to kind of stay in the same lane as the color on your chart. When you guys, and I'm assuming you guys have watched the trigger line video, but again, look, waiting for a trend trade with all strong triggers is the easiest, highest probability trade you guys are going to do initially, because it's the easiest one to see, right? It's obvious. When you guys recognize or increase your ability to say this is a good top or bottom, then you can start trading faster charts. So, for example, right, can we say that this potentially could be a good top because there's no triggers above it? Pivot stop out at a fib. Is everybody okay with that? So you already know right here at this moment in time, right there, that you might have a good top. Now, it could go away a lot quicker, but see how the small triggers have rolled right there? Now, I'm not saying go short. I'm just saying we have to recognize that, again, we're at a key spot. So look, this is where some people will go to, like our market flow charts. Right? And again, I don't want to get confusing with people. It's just such a mess. It's not even a trade in here. None of the rules are met, so it doesn't really matter. But if the rules were met, for a market flow type short trade, then, you could get away with it. Obviously, we got a little sideways. You got news coming out in 3 minutes? So this is going to go probably bat poop crazy here in a few minutes. So they're just winding up. All right. If you have questions, ask them. All right. Abdul, let's see what you got. Your question is, if I take a short after a market flow signal, when is the right time to take a market flow signal? All right. I have an exact answer for you. Are you ready? It's an exact answer. Let me find the darn thing. All right. Here's your market flow analysis. Are you ready? Market flow signals that will initiate an entry when your rules are true. So if you have a trend trade rule that is true and you want to wait for a signal to get in versus getting in at the area, that's the time. So if you have a trend trade that's true, or if you have a top or bottom that's true and you have a high volume area, green or magenta line, these are the only times where you should be looking for some type of market flow signal. So when you say when is the right time is when you have trend trade rules met that are true and you need a signal to get in. That make sense? So if these rules are not true, then you shouldn't be looking for a signal. So, are trend trade rules true? So, again, we have to go through. We'll look at your rules. So, again, strong triggers down, pull back to a mid band, into the large trigger. So, the answer is yes, yes, and yes. The rules are true. So that is technically a short trade. And again, we should go down eventually down to what? I'm just looking at your chart here. We should go down to 80 to 78, give or take. So somewhere from '07, this whole 16 to '07 area, that's the area, down to that area. Is everybody okay with that for chart reading on his chart? It should go down based on the triggers and the fibs. All right, cool. All right, G, let's see what you got. Okay, you're posting in that we got news coming. P, let's see what you got. Okay, so you went short there. Cool. And you took some profit, and then you got out with a higher divergence. And again, this is where a lot of times you see this resistance up here. Let's use some of our mad chart reading skills. You guys ready? I want you to read this fib and give me an anticipation of what should happen. Here, watch. I'll save it off. Hang on. So looking at the fib line itself and the direction and location of our triggers, can we have any type of opinion about 8016? Yeah, so, a lot of times trend trades don't always finish the first time. Sometimes they get a bigger running head start. But before we make any commitment to trading it, we have to be able to read it and understand the anticipation of what should happen. Does that make sense? So, yes, we had a trend trade, and that was your trend trade. And yes, you did great at taking some profit and managing out of it. And then if you go into termination on the large chart and one-to-ones and fibs on your small chart, had you have, this may be another chance for another market flow signal. Say you get a signal. And then ultimately, 8016 down to 78. Does that make sense? So you take the first one, but then because you can read your charts really well, you take the second one, and that's where usually all the big money happens. There was a signal there. Yeah, it happens all the time. Here, let me get back to my charts. So let's look at it. All right. So again, look, I had drawn in boxes, so it's not really a mystery. So it went from resistance that was supposed to hold down to the fibs where the target was supposed to be. Not really a shocker. So look, the first trend trade didn't finish, but the second one did. All right, you guys give me some live analysis right now. Are the blue fibs going to hold? Yes or no, or I don't know. Not yet, right? Triggers are past the fibs, which generally means it's going to keep going, or it's going to probably break, may break. No, it's not the bars. I'm glad you said that, Dr. P. The bars have nothing to do with it. It's the trigger line location, not the bars themselves. I'm glad you said that. Because, a lot of times you'll get bars that are past, but the triggers don't go. Here, I'm trying to find it. And that's, again, look. I'm trying to find a good example, but anyway. It's not the bars, it's the triggers. Now, let me go back to our termination condition in our trading plan. I just want you to see this for a second. Bear with me, 2 seconds. Remember this picture that we had? This happens a lot. So sometimes the triggers and price bars will get a little bit past it, but then it gets quickly back above it without actually changing the color. You see that? So you get a little overrun and then they get back up. And then eventually we had talked about the second time they made a good bottom after a divergence pivot stop out. So this looks similar, to the beginning of it. And again, right now we have to kind of, if we have both charts up, we'll have a better answer. And again, we have to decide whether or not we had a little bit of an overrun or whether we're going to keep going down. And that's where the smaller chart comes in. Right? So we're not going long, let's just put it that way. Well, if you go short, there is no short, right? Not at the moment. You're not going long, that's for sure. Everybody agree with that? Well, if you were short, let's just say hypothetically you were short, you had a third divergence that was higher that probably would run you out of your trade. So again, we have to decide when can we get back on, the idea of selling resistance. Do we look for entry off the 8 range or for the 5-1? When you say we, again, it depends. Some people don't use an 8 range chart, Shogun. So if you did use an 8 range chart, if you don't use an 8 range chart and these are the only two you don't have a lot of choice, right? There's just this chart and that's basically it. So, and at the moment, right now, our small chart leaning to the downside. We just have to recognize that if we don't continue down after this, if we don't finish off the move wherever our next fib is. Again, I don't want to introduce too much market flow chart because it's confusing. I just want you guys to think 2 charts, where are my triggers, anticipation of holding or breaking. Shogun, what do you mean, where do I enter? What are the rules for entry? Is that what you're asking me? Hold on. Okay, are you ready? Let's do it. So, there's 3 rules for an entry. So, number 1, if the market is going up, the entry is going to be at whatever Fibonacci lines are inside of the large triggers. Mark does this every day. When I say every day, I mean freaking every day. Okay, look, if you go to our replays, the first hour of every day of every one of these videos is how to do a trend trade. There's hundreds of them. So trend trades are all the same, guys. They're mid bands, fibs, inside of the large triggers. Is everybody okay with that? So again, this whole thing goes through it, but as the market pulls back, wherever your mid bands, fibs, and triggers and one-to-ones are, that's your trade. Well, so let's figure out where. So we have to do two things. We have to look at our large chart first, and we have to have a reasonable expectation that we're going down. So, did we have a reasonable expectation that we were going to go down from somewhere? I think the answer is yes. Again, we were pretty darn far below. Now, when we go to the real world, right, which is your smaller chart, you probably had an entry if you were going to get inside of the large triggers and mid bands. This would have been your entry, give or take. Yes? So somewhere in there is your entry. Mid bands, fibs, triggers, everything coming together. And, again, you had a third divergence, which probably would have taken you out of your trade. So you probably would have got out right here. So you could have gotten in here and probably out here and had a little loss. Is that fair? And then as it goes forward, you have to ask yourself, can you take another trade if the rules become true again? So can you sell fibs and mid bands again? Well, look at your triggers. Is it worth taking a second shot at it? I think the answer is yes. I don't know. You tell me. The rules say sell at the fibs and mid bands, so yes. All right, so look at what we had. So we had a 1-to-1 down here at the bottom. We had some divergence on our small chart over here at the bottom. And what else do you notice about this chart? Other than the fact that we have a lot of fibs, right? So we have to anticipate whether or not they're going to hold. But we can't do trend trades anymore. Why not? Not saying that the fibs won't hold. I'm just saying, why can't we do trend trades? Your triggers are crossed up, right? No, your small triggers are crossed up. They have to be crossed down to do trend trades. And if they're crossed up, we're not doing trend trades. And we're not going long because, obviously, we have resistance. No. It just means you're not doing trend trades. Trend trades need the small triggers crossed in your favor. Remember we did this little lesson? Watch. Hang on. I'm going to do it again. All right. Okay, so look, is it easier to see now? So look, small triggers are crossed down, sell resistances. Small triggers are crossed up, don't sell resistances, wait for resistances to break. Or wait for the triggers to roll down again, either one. Is that a better visual? Hang on a second. Bear with me. I'm going to handle a dog for 2 seconds. Hold on. All right, guys. Sorry about that. So, anyway, short version is, areas, small triggers. Once the small triggers roll over, you're not doing trend trades anymore. It's just, I think it makes your life visually a little easier here. So there was an opportunity. Obviously, triggers roll up, and again, we're going to threaten resistance here again. So we'll see what they say. Notice the difference in the small triggers the first time we were at this resistance, and then notice what the small triggers are doing the second time at this resistance.
I gotta tell you something. I'm so sorry.
Okay. Now, anticipate this resistance. So far, what are you thinking? It's not going to hold yet. Obviously, we got a little pivot stop out that we're going to have to contend with. So, again, look, no shorts unless the triggers roll down below resistance. Easy enough. If we keep going up, it's just going to keep going up. So, anyway, we'll see what happens here at this spot. Everybody okay with this? It's going to be a key spot for us, and they're, again, they're leaning to the upside like they're going to break out. They haven't really done it yet with, again, when price gets below that pink line, we're not necessarily going long, but we're not going short yet either. So, key spot, we'll see what happens. It's not a breakout yet. It's just one little trigger past it. And again, look, watch. Notice the rules for a pivot stop out. Let me go show them to you real quick. It's just going to keep you from going long. Watch. Bear with me. When price trades above a divergence line and then price is physically below the divergence line, we're not going long. Is everybody okay with this? So if price goes above a magenta line and then price is below the magenta line, we're not going long. Even if the triggers are crossed up, we're not going long. So this is a good example of that right here. So again, we get above it and then back below it. We're not going long. So at the moment, we've got a pivot stop out that's held, but we also now have mid-band and fibs that might hold. So they're going to make a decision here in just a second, and we'll see what happens. Could go either way. I mean, the more we go down, the more likely it is we'll keep going down. It was a bad bottom. All right. Here's your smaller chart. So there's nothing to do. I mean, nothing lines up on any of the charts. So you're just kind of waiting here. Again, look, let me turn back on our large triggers because, again, I wasn't plotting them just to show you that once the smalls turn, you're done going short. That was kind of just the point. I'm going to turn the indicators back on again just so they're like they were normally. Bear with me here. You guys will be surprised at how few trades there actually are once you're actually waiting for all the fibs and all the triggers and everything to line up perfectly. Then, once you get it to all line up perfectly, then you get a few trades here and there, and that's all it takes. All right. Shogun, you're trying too hard. It's not a good bottom. It was just a bottom. It wasn't a good bottom. It's going to be a better top because, again, we've had divergence, 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 a pivot stop out, one to ones, triggers rolling. So, looks to me to be a better top than it is a better bottom. There's a lot of reasons for tops, right? Pivot stop out with divergence, a lower divergence. Didn't really turn from anywhere down here, so that's not really a good bottom. And then they stopped out the high because they're just mean, and they do that sometimes. So at the moment, looking at your small triggers, it's what? Maybe a short, but again, do you even have a trade set up over here on your smaller chart or not really? So there's not even a trade. So there's nothing to do. It's just nothing. It usually does, David. Right? A pivot stop out with fibs and one-to-ones, it does have a tendency to turn the market sometimes. Still doesn't make a trade yet. So it stopped it, but that's about all we know about it for the moment. Yeah. It did. All right, let's see what our NASDAQ is up to. All righty. I guess they found some legs after 10 o'clock, huh? All right, so I guess. I don't know. You're going to drive me to drink. All right, so we'll go back to where we were up at the top. Obviously, we had a top, right? They had news at 10, so they went crazy. Obviously, they spiked down. Here's the thing about news. The market does exactly what it's supposed to do, and there's no way you can take advantage of it because it's so damn fast sometimes. Sometimes you can and sometimes you can't. But look, the market did exactly what it was supposed to do. It holds at the top, and after the trigger lines roll, if you have an opportunity to go short, you can take advantage of it. And then you don't have to guess as to where the bottom's going to be. The market will tell you when it holds and the triggers roll. And then if you get an opportunity to go long that fits the rules, you can obviously take advantage of it, which you probably didn't. And then instead of guessing as to what the top is going to be, you wait for the top and the small triggers to roll. And then if you get an opportunity to go short, that makes sense. That one makes more sense to me. You guys see it? I mean, we had a tail there, so it's probably the first time that anybody could have gotten short right there. Make sense? And again, if you got short there, there's a little opportunity. As we progress down, this is a very common, we get a bounce and then mid bands and fibs hold. Triggers are way below. After the small triggers roll over, you can go short again. You see it? Area hold, small triggers roll. We get to a fib. Read it for me. Tell me if I'm off base here, but triggers are below the fib, which means it might break. It might. And after it does, if the small triggers roll over and you get a pullback, you can probably do one more short trade. See it? And then eventually we get fib and then pivot stop out. And what do you guys think about this pivot stop out? See what your triggers are telling you? They're not below it. So if the small triggers roll over, maybe you get an opportunity to go long. Am I off base, or do you guys see this, or am I off base? You see it, don't you? Now, you may not be good at it yet, but hopefully you at least read the chart correctly. So you look at how far away the circle is from the actual top or bottom. I want you to think about this for a second. So this was the top, and not until all this happened did you even have a little pullback where you might do a trade. So now it's a lot faster on the NASDAQ after news, of course, but all this, I understand it was seconds on the NASDAQ, but it could be 30 minutes on the S&P. You see what I'm saying? It's not how fast it is, it's the look. That's why new people can't trade the NASDAQ, because you're not quick enough to go, oh, that's a good top, and the triggers have rolled, I'm going short. By the time you process all of it, it's too damn late, you missed it. But I want you guys to understand this portion of it. You're not trying to anticipate the top. Do you understand? You're not trying to guess as to what you let the market do it with what the trigger line location and roll says. And then you don't have to guess. And then look, after this top holds, you're not even going short until way over here after the small triggers roll over. So it doesn't matter what happens over here. That's not yours. It's not until you get over here that it's yours, which still was fast. And again, look, recognizing over here that it might break is not your trade. That's not your trade. It's just, hey, I recognize it might break. And your trade doesn't come until, a minute or two later, way over here. And then down here, you recognize that it might be a low, but you don't get a trade until later. All right, let me find the end of this thing. Good God. All right. Okay, this is almost ridiculous, but hang on. So, like I was saying, NASDAQ is a little bit more, little busier than some of the other markets, and that's why we love it and hate it all at the same time. All right, so let's go forward. And again, look, here's your fib and your triggers rolling. Look, maybe you went short. Had a loser. It's okay. It happens. Triggers roll back up. Guess what? Resume that trend. Let's see what we got. Let's see when the small triggers do roll down. Obviously, we have a little tail. 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 And ultimately, we got up to the resistance, and instead of us guessing as to which one it's going to be, the market will tell us. It'll hold and the triggers will roll, and then we'll see if we can find a pullback for a short trade, which it doesn't look like there was one until here. Didn't take long, but you guys see it? And again, when you're here, you're like, can I really go short? And I think, again, just based on trigger line location and strength, you can sell one time. What do you think? I think so. And then, you get to fibs and you're wondering, is it going to hold? Is it going to hold? I don't know. And then ultimately, we do hold. They roll up. You might get one long trade, which is short-lived. And then you have to resume the downtrend. So fibs hold, triggers roll, resume the downtrend, and we get through fibs, anticipate to hold. And now we're going back up. Right? Just like that. Fibs hold again. That NASDAQ is fun, isn't it? Anyway, they're trying to put in a bottom. They might even put in, watch. This is a good spot for one of those little pivot stop outs. We'll see if it stops right there. But can you see it? If it stops right here and then rolls back up, you can start taking long trades. If it breaks, then we'll go short. So again, reading our triggers at the area. We know we're at the area, right? Everybody cool with that? So pivot stop out from the area. Small triggers are rolling up. Guess what's going to happen? We'll see. We're not going short anymore, I can tell you that. Not really going long either. One of them's going to break. Support will break, and then we'll have a short, or support holds. See how your small triggers are threatening to get above right there? Can you see it happening live? There you go. Now they're starting to threaten to go up. Anyway, I'd expect it to maybe run up to here real quick. That would be my guess anyway. Now, large triggers are still down, so it's not really a great trend trade or anything. But as far as chart reading goes, we have the potential of a bottom here. See if we can get somebody else to participate in it. Or if it breaks. Is this helpful? I mean, we've kind of gone through all this analysis to get us up to live here so you can read it live. And again, we know we got a bottom. You can see the small trigger loans trying to peek their head up above here. It's not great because the large triggers aren't coming along yet. So it's just kind of messing around here. When the large triggers come along, or these two actually agree with each other, then they'll be able to finish the move off. The lean is to the upside because support held, divergence on the bottom, small triggers are up. And again, we already drew in where they may go to if they do go up. Nope, they're not going up. See how the triggers have rolled over? Now, we're not going short because support hadn't broke yet. So, again, just because the small triggers rolled over, we're not necessarily saying, hey, we're going short. Just waiting for all the triggers. Look, we're waiting for this. We're waiting for all the triggers to be going up or all of them to be going down, and then you'll be off to the races. So right now, this is a whole bunch of nothingness. And again, we don't know what's going to happen. We'll see. They're on the verge of breaking out to the downside. Aren't they? On the verge, but again, pivot stop out at the top. We're not going long. Pivot stop out at the bottom. We're not going short. Now they're both up. So we have a pivot stop out, and they finally both turned up. So now we should, if we're going to anyway, we should finish that move off to the upside. If. What do you guys think about the read? The read a little bit easier. I mean, you can see how crappy it was in here. It's just a whole bunch of mess and nothingness. They're just not going anywhere, are they? Support and resistance holding. One of them's going to break, guys. We kind of said this earlier in our session today, didn't we? That when you get stuck in between support and resistance that may hold, they may go choppy. And that's what they've done. Now they've decided. That's a decision right there. You see it? So we can resume downtrend and nothing but. Here, let me clean up my mess. Took a minute for them to work it out, didn't it? And again, look, this is very typical. Top, bottom, top, bottom, top, bottom. None of the triggers broke. This is the first time out of any of those support or resistances that the triggers broke out of it. Now, whether or not there's actually a trade you can take is a different scenario. We're just chart reading now. So we have to go into the area and ask ourselves questions. We want to see triggers break completely below it if it's going to keep on going. If they get a little below it, I mean, again, lean is to the downside. We'll see what happens. I'm afraid to even look at the little chart, but it's probably pretty choppy. Bear with me. All right. Here, we'll just stay on the big chart for now because it's... See how they overran just a little bit? So we've got our, again, I go back to the pictures in our guide. Look how exact. This is exactly what just happened. We got a little bit past. They put in a divergence. So it's a warning that, they tried to go, but they didn't. A lot of times they'll retest it, and then we'll see what happens. So it's a very similar thing. You would not be thinking short trades, right? Now, do you remember what we said about this picture? Again, I'm going to go back to it, that this is not a great bottom. That because price got a little bit below it, they usually come back and retest. They don't have to. And they didn't. Anyway, there's no mistaking like you're about to go short, right? Now, everything's up. We have decisions to make at this price. Triggers above it or not really? So again, do you want to take one more long to get to the edge, or is there not enough room to go? Not enough room, is there? This is where they'll usually come back down, like we said, and they'll retest this area. And when they retest this area, they'll make decisions, big decisions, whether or not it's a good bottom or we'll see what happens. Or you just keep on going up. They're not even going to come down and retest. All right, so leaning up and nothing but up. So is there long trades to be had, guys? You see how fast the NASDAQ is? This is why we tell people who are new, the NASDAQ is not really for you, because if you're not really on your game, like I think Janesh put it best. He said, if you can't read all of your charts in 3 seconds and decide whether you have a high probability trade or not, you shouldn't be trading the NASDAQ. So we can stop watching if you want and go back to crude, but crude's not going anywhere. we're now in the stuck in the chop zone on crude. So there's no fun to be had on crude oil today. If you guys have trades that you've done and you want to put them in, please feel free. Okay. PFI, you have a great question here. Okay, so I wanted to save your picture off here just so I can blow it up a little bit. Where the heck is your picture? Dang it. Hang on. This is where a lot of people get messed up. So I'm glad you actually put this in here. This is a great question. Bear with me 2 seconds. A condition, think about it. A condition is something was hit that caused a reversal. So it's just a pink dot at the moment, right? And you have to decide whether or not the market's going to hold and reverse from that little one teeny tiny little pink dot. So when you look at the sum total of your indicators here, a condition means you have something, right? So it's just like this fib. This fib is a fib, but it's not a termination condition because the conditions for reversal are not true. So it's just a line on your chart until the trigger lines tell you it's a termination condition. Does that make sense? So it's just like this blue line could be a line on your chart, but it's not a termination condition. And it ends up obviously breaking and becoming resistance for a short trade. So it's just a line on your chart until the triggers tell you it's a condition. I don't understand what you're saying. So it touched and, I mean, look, this is a short trade, probably. And then you're probably taking target 1 at the pink dot and target 2 at the blue line. Right? All right. Let's take a look at, this is our NASDAQ. Again, look, more chart reading. Well, look, I'll use the live chart as a better example. This is a termination condition. Same pink dot, but it's just a pink dot until it reverses the market. Do you understand what I'm saying? Now, obviously, there's a lot of reasons why the market could turn here. There's fibs and pivot stop outs and dots, but it's still just an area and it could still break. We don't know until after you start getting down bars, and then it's a termination condition. So I think this is good for terminology. I would call this an area of resistance, and then after it holds, it's a termination condition. How's that? Is that better? Rakesh, I don't know what you're talking about. You have a picture for me that can illustrate? You see how I'm illustrating what I'm saying? You're just saying things that I have no context on what you're talking about. So I'm not sure I can be helpful. The same chart? Yeah, so look, the small triggers turned around after that happened. Now, when do you have a short trade? I mean, you don't really have a short trade unless you're using a smaller chart, obviously, until you have some type of a pullback, which again, we'd have to go look at the smaller charts to see, exactly where some trades are. But after this area happens and the small triggers roll over, you're okay to take a short, right? You're okay to take a short if you get one. So wherever they happen, that's fine. And you're still okay to take shorts. Short, 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 and still more shorts. And, eventually one of these is going to hold or we'll break one going back up to the upside. But until we do, it's shorts and until the cows come home. All right, questions. I know we're just doing chart reading today. It's a lot of chart reading. Not a lot of specifics on trades. The trading rules are so well documented. I don't think you need me to go over the trading rules with you. I think, if you read your charts correctly, the rules are obvious. All right. Questions. What about the mid band? So you have 4 questions there, Rain. What about the mid band for entry and gap? And what about SR related relative to the triggers? So you have 4 questions there. Okay. I don't know what you mean then. I'm trying to digest what you're saying, but how to use the midband. All right. Well, the midband is an area, right? So when you get to it, you just read your. I mean, again, look, you're not trading the midband on your large chart, are you? So you're only using the midband for 2 things. Bear with me. I lost my website. Hang on a second. So on the smaller chart for entry, you can use the mid band as one of your entry indicators. So let's start with that. Okay. On the large chart, so you're okay with that, right? I mean, if you have a trend trade and the mid band's involved, you can use that as an entry. I think everybody's okay with that. When you're looking at your large chart, the mid band can be support or resistance that could potentially terminate a move. But just like we've been doing all day, everything that you look at support or resistance line is based on a comparison of the area versus the trigger line strength and location. So again, look, I mean, I'll just use the chart that's right here in front of me. So again, if we're only looking at the mid band, so can I blow it up? So the mid band got hit here and the mid band got hit here. So strength of direction and location. So when we hit the resistance the first time, it looks to me like the strength of the trigger lines is really strong to the upside. Can we agree with that? So, you know, the mid-band maybe makes it go down a little bit, but the triggers are really, 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 really strong. So it looks to me like the mid-band could break. So it's not very helpful. Now, when we reach the mid-band over here, when it's green, we have to also look at the trigger lines. And again, to me, it looks like if I'm looking at just my trigger lines, I see the small triggers are way above the green mid-band. And the large triggers are really, really wide at the mid-band, so the mid-band may hold. Is that a fair read? Just based on trigger line location and strength, the mid-band should and probably will hold. Now, if you use that as an entry area, that's fine. If you're watching your smaller chart for an entry or a market flow entry or a high volume line entry or whatever, but I think we can go in and say this mid-band probably is going to hold based on small trigger location and large trigger strength and direction. Well, it's always the same thing. What do the triggers tell you? Every line on your chart is the same thing, right? When you get to this line on your chart, the triggers tell you that it might hold for a minute. And then a minute later, the triggers tell you exactly what you should think about that same area, which is it's going to be support and go up. And then when you get to the top, you get the same thing. You get where are the triggers located. And again, you guys don't understand how freaking important this is. Because you can never read a chart wrong once you get this down. Now, you don't always get a winning trade, but you don't read your charts wrong. And you don't go, oh, I thought it was going up or I thought it was going down. It's just you don't ever get it wrong. It doesn't mean you always win. I'm just saying the read is never wrong. So, again, we don't know, which one's going to be the bottom, but eventually, look, we made a bottom right here. I think, can we agree? Finally, a fib held that where the triggers didn't break below it. And, unfortunately, we had the same thing at the top. We have fibs holding, and Dr. P, you could throw the mid-band in there as well, but we have fibs and mid-band holding. And then now let's go to our live market, and what is the anticipation? It should be horrifically, scorchingly, painfully obvious on what the expectation is. Doesn't mean it's always going to keep going, but it says down, right? Yes. Read the triggers at every support and resistance. But again, when we get to support, we ask ourselves a question. What are the triggers doing? Did they get past it? Yes. So now we have down triggers at resistance. And again, are we going to make it to support? I don't know. But usually we make it to the next support if it doesn't have to do anything. I mean, obviously it's the NASDAQ, but all right. Read this mid band before we get there, Dr. P. Is there any chance with those triggers we're going to break the mid band right away? Just before we even get there. Not yet. I mean, it can change very quickly on the NASDAQ, of course. But there's no indication that any support's going to hold on these charts, right? You know, I used to do market replay, and I would go back and I would load up a whole week's worth of charts, Monday through Friday. And I would play it at like 50 or 70, 50 times speed, 30 times speed. And I would literally just sit here and I would go from Monday all the way through to Friday and say, we're going up, we're going down, we're going up, we're going down, we're going up, we're going down. And I would look at this and say, we're going down, nothing but down. Down, 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 and we're going to here. And I would just sit and watch it. Now, watching the NASDAQ is kind of like watching the market at 30 times speed, right? But once you get this reading down, then the trades really, it becomes pretty easy and obvious to you that, look, you can see the divergence up top. So if we get a pivot stop out up here, we have to have an anticipation. We may not get it, but should just go down. Right? And you can see where we're going before we even get there. Well, that's the first spot. And again, if you have an expectation that we're going down, then you can go look at your small charts and find a short trade. Seems almost too easy, right? Get the read right, have everything going in your favor, find a trade. All right, questions? All right. And look, as we get into this window, we start to process over again. Are the triggers really below it or not really? So if you were short after the small triggers rolled over and you had a profit target in, look, from 79 down to 55, you can make a living on that, couldn't you? Probably get to 50, may keep going, who knows. But again, you don't need a lot of trades. You just need one or two little trades a day, and that's all you need. Right? I mean, there's 4 trillion trades in a day in the NASDAQ. So you just have to really wait for a good top and wait for those triggers to roll over, and then you can catch one here or there. You don't need them all. You just need, 1 or 2. Anyway, now we can go a step further and say, again, when we get to support, we can also start watching our smaller chart, right? Because again, the smaller chart will give you a little bit of a faster read. And again, when we get to this fib, you can kind of see that the smaller chart was also telling us what? Not only did we have divergence, but we had a second divergence from that support and that the triggers held. You see that? So it's not just one chart. The big chart's a start, but now you start adding in, hey, the large chart says we might hold, and the small chart says we might hold. Guess what? Some people start thinking. If the large chart and the small chart say we're going up, some people will start doing that first long trade. Now, maybe yes, maybe no, but again, we'll see. I still think we'll come down. We'll do, look, I can predict. It doesn't always happen, but again, this is a really good look for one of these jobs right here. For them to come down and then go back up and then come back down and stop everybody out, get to that 1-to-1, make a little pivot stop out, and then, ultimately we'll see what happens. So this is my prediction for you. And again, you can see it coming. Watch. If it happens. I'm not saying it will, but you can kind of see it coming, can't you? Dr. P, I want you to have the honors of telling me about this midband. Is it going to break or could it maybe hold based on where the triggers are? Yeah, so it might hold, right? And then look, we'll come down, we'll make our little pivot stop out, and then they'll make the real decision on whether it's going to be a good bottom or not. I don't know if it will be or not, but if they stop now and go back up, now they can be a better bottom. And then we'll go whoosh, run up to there. I'm just saying. If I was to guess, which I don't have to, but now, at the moment, it's not a long trade. It's just a potential termination. Right? Potential termination. That's the ones we'd like to see, though. Fibs and pivot stop outs. We love that look, don't we? Now, let's look at what our small chart's telling us. See if we get any hints. See any hints that we have on our small chart, like divergence and then a higher divergence is also trying to tell us, hey, maybe. What do you think? Pretty cool. And look, we could go even further and say, well, what does our market flow chart say at that spot? Do we have the market flow leaning to the upside? And then we say, look, do we have high volume lines? See, this is one of those high volume line trades right there. See it? So we have multiple charts that say a bottom, and then we have this high volume line. That's a long trade right there. If you're into doing high volume lines after termination conditions. So that was your long. See it? The green high volume line. Everybody knows that trade. You may not know it yet, but again, look, that's the high volume line trade perfectly. Live as it was happening. Top or bottom, triggers roll, no termination, enter at the high volume line. Anyway, you have to have all this, bottom, pivot stop out, divergence, easy high volume long trade to get up to resistance. Anyway, that was cool, right? Did you guys catch all that? Here, I'll make obviously we hit the target, but look, I'll make a picture of the whole thing and I'll slow it down for you. Like I said, if you're not really fast with your rules. All right, so I'm going to just draw it all out for you. Bear with me. So, divergence, pivot, stop out, low. Second higher divergence is good for a low. And then this is where we had And then so from 64 up to 80 whatever, right? So that's your target. At least the first target. By the time you can type all this out, it's already over on the NASDAQ. All right. What are the probabilities on it? About 80%. When you have termination on all three charts and a high volume line with the triggers going up, it's about 80 or 90%. You could almost call it a trend trade too. You could almost call it a trend trade or a momentum trade, or I mean, that's the spot right there. But do you see how all the triggers are going up? I mean, literally everything on the planet right there says is going. So that's all you're looking for. So again, look, we'll go back and talk about it and say if you had termination, this was your high volume line trade right there. That first little circle. And then without giving away the party, if the bottom is good and the triggers are strong, you can keep buying as long as the triggers remain strong. Do you see any other spots where you could go long? I think the answer is hell yeah, you do. Even if you waited for the fibs to break and you bought over here, you could have had a couple bucks. The amount of money in those two moves right there is freaking astronomical. But look, this is exactly what we talked about all morning long, isn't it? Fibs hold, triggers roll, triggers are strong. It shouldn't be foreign to you. No, you may not be good enough to do it yet this fast because the NASDAQ, obviously is a very fast market. But the rules are true when the rules are true, no matter how fast it is. The only difference is you don't have to wait long on the NASDAQ for things to change. All right. So we have to anticipate, again, we get to fibs. What do you say, guys? We're not going down yet, are we? And again, look at what happened on the small chart. Obviously, this was our area for going long if you were going to go long. And then, again, you have to kind of decide whether or not you're going to hang in there for the big move or not. If you're trading for little moves, then you get a little move. If you're trading for the big move, obviously, this is where you want it to go to. Right? I mean, that's the big target, the big picture. So, are you trading for pennies or are you trading for dollars? When the NASDAQ moves really big, usually you get pretty big moves out of it. Anyway, hopefully the chart reading should be freaking obvious to you, right? We get to resistance, the triggers break past it, support holds. Usually we make it up to resistance. They don't have to, but usually they do. Pretty cool, right? And, look, starting all the way back here at the high volume area, look, we were looking for longs from this price, 14,764. That was the first long trade where the rules were true. So just to give you perspective, that was right here. Since that time, we're only up 90 points on the NASDAQ. 1,800 bucks, $2,000 so far. It's only gone up 2,000 bucks since that first long trade. So now I want you guys to answer a question for me. How much money do you want to make a day? 500 bucks, 1,000 bucks, $1,000 a day. Yeah, look, if you make 500 a day, you can make 10,000 a day. You just trade more contracts, right? There you go. And again, look, if you could just make 300 bucks a day, you don't have to make 500 or 1,000, just 2 or 300 bucks a day. And do it consistently because everything on every chart is going your way. That's the secret. And just waiting for everything to be in your direction. All right. And the other thing is too, look, the smaller charts will eventually give out on you, and then moves do come to an end, right? So this is a very typical. We'll go back and get to the mid-band look. So look, you'll see this. Go find 7,000 of these and you'll see the same damn thing every time. So look, weak triggers on large chart along with a pivot stop out on the small chart. Usually this is the precursor almost every single time to the market going back down and getting back to the mid-band and fibs. So this is where the market will come down and get down to your mid-band and fibs and then go back up and finish the move. Can you see it? But it's weak triggers that combined with the pivot stop out that's going to get you back to this area. And again, I can see it. I can see it and I can say it, and it's easy to see. Is it really going to make it back to this area? Let's look. Oh, shocker. It made it right back to the area. And now we have to start over. Fibs. And then what's going to happen from the fibs? I don't know, but we'll see. Are they going to hold? Are we going to have some high volume line trades? Are we going to have some momentum trades? What's going to happen? Most of the time I enter a market order. Is that a good idea? Yeah, sure. I mean, you can get in any way you want, Rakesh. As long as you get in at the right spot, under the right conditions, it doesn't matter whether it's a limit order or market order. Doesn't really matter. Hey, I need to take a break for 2 minutes. I'm going to be right back. So, and I'll answer your question, Shogun. So, quick 2-minute break. I'll be right back. All right, guys, I'm back. Chart reading. So look, we made it back down to fibs. So again, just because we make it to fibs doesn't mean it's going to go up. So we have to read our fibs and triggers. So what did we end up with, guys? We got to fibs, which was cute, but did the triggers roll up? No. Was there any reason to think we should start going long just because we're at a blue line? No. And then what happens after we break through the blue line? Is there a reason to go short? And again, you have to look at your small charts for trade setups. But again, I would say personally, look, there's no reason to go short here because you don't know it's going to break. You know, it's cute after the fact, but, you know, initially you're like, nah, it's not going to break. Then after the triggers are down far enough, then so this area I would say no. But then when the triggers go far enough, then you can say, okay, yes, we could probably take one short. So again, when you look at it on your small chart, it looks like this. So, and again, I think this makes a lot of sense, don't you? Look. We're at support. You can't go long, but you can't go short either. And then once the small chart agrees with the large chart, this is where we were saying you could probably go short. What do you think? It looks right, doesn't it? And then obviously we get to the next fib. And so look, I want you guys to understand this chart reading and this process here. I think this is a really good little exchange. So we get to fibs, and not until we break the fib can you go short. I mean, that's pretty easy, right? So either they roll back up or they break, and they broke, which is cool. Right? You don't know what's going to happen. You don't have to know. You just have to read what is happening. All right, so give it to me now. Look, termination, spot, and condition. Yes? Sure thing, Sophia. So look, first, Shogun, how do you know when to stop trading for the day? That's a great question. I want to answer it first, okay? So the first thing you should do is you should have some kind of plan that you write out for yourself on what you're going to do. So let's take a look at what I wrote. Are you ready? I'll copy paste it in for you. Here, I'll give you a copy of my plan if you want. So there you can have a copy. So let's look at it together. It says my goal is 800 per contract. I will keep trading until I have a $200 trailing stop per contract loss from my equity highs. Do you understand that? So if I get up $800 and I lose $200, I'll stop. If I'm up 1,000 and I lose $200, I'll stop. If I'm up 1,500 and I lose $200, I'll stop. That's one way. Or if I have two basically loss limits. So if I hit down $400 a contract, I'll stop trading. However, if I hit that limit, I'm going to assess myself. If I took all perfect trades that fit the rules and there's no rule breaking and I didn't do any BS, then I probably will trade some more. If I did break rules, then I should stop trading live money and not do any more damage. If I did, so do you understand the difference here? So I'm saying to myself, if I did perfect trades per the rules and everything was perfect, it doesn't change the odds of what's going to happen on the next trades. So if I'm doing bullshit trades and screwing off and I'm down money, then I should stop. And then ultimately, don't blow out your whole trading account. Try not to lose more than $750 on one contract per day. Now, if you make $800 a contract, then, if you have one bad day, then one good day pretty much wipes it out. The hard part is, look, you can write all these rules out, but if you don't follow them, then it doesn't really matter. So the hard part is not writing out the rules. The hard part's following the rules. Okay. All right. Hopefully that answers your question. Sophia talked about a buy, sell, stop order. Okay, so this is what he was talking about. Let's assume I wanted to go long. Okay? Are we okay with that? I'm just going to assume I want to go long. So if there's a down bar and I'm waiting for an up bar to go long, I just right click. I'll right click on the chart and I'll put a buy stop order in. You see that? So if I have an up bar, I'll go long. So I'm anticipating going long because for whatever reason, I'm not even saying it's a long trade. I'm just saying I wanted a stop order. So let's say I wanted to buy some more. I could right click on the chart and I could put a buy stop in above the high and say if they break the high or give me another up bar, I'll go long again. And I'm not saying it's long trades. I'm just saying that's how you stop yourself into a position. Well, a lot of times this will be more with trend trades. Like if you're doing a trend trade long and you're waiting for an up bar. Like let's just say hypothetically I'm waiting to go long. So I right click on the chart and I have a buy stop order in where the up bar is. And then that way it gets me long after an up bar, and then obviously you can manage your position after that. So look, this is the look for a trend trade right here, right? So if it came back into there and I needed an up bar, I could just right click on the chart and put in a buy stop above and up. Anyway, hopefully you get the idea. Anyway, that was easy. All right, so watch. Let's say this is going to be a trend trade long. You okay with that idea? And because it's a trend trade long, I'm going to need an up bar. Well, it has to get into this spot a little bit more. So I'm going to wait for an up bar to go long. It's going to mess me up if it doesn't come down in there. Anyway, but that's the idea, is it comes down into the buy spot, and because I'm waiting for an up bar, I'll do it with a stop order. And those are really good for trend trades, on the NASDAQ. Anyway, it's still going, so. All right, so let's look at our chart and see if we could have figured out that it was actually going to be a bottom. So we had, you guys just shout it out if you know it, 1-to-1s twice, triggers roll up, we get to fibs, and then obviously we have, and again, this is why I was willing to buy, because this is not a bad buy spot, is it? And then obviously we got out at some fibs, and then we broke through. And now we're going to go finish that business and make it up to the fib we were going to make it up to last time. We're just going to make it this time. Anyway, when you step back and look at it, you can see it pretty easily, right? You just have to be able to see it the same way. So look, watch, Sophia. Let's say I was trying to do a trend trade. You see it? Quick. You got to look quick. So I want a buy stop order before I go long. So now I had a reversal bar, and then I get my trend trade long. I can pull my stop up behind the pivot. And then we just hope that they go on all the way up to resistance. You see it? It was quick. I just wanted to make sure you saw it. Again, we get to the prior high. Maybe you could reduce your risk a little bit if you wanted to, but it's pretty strong, and they haven't made it to the fib yet, so just leave it alone. So there's 10 points on the NASDAQ pretty quick. And there's your target. So there's a trend trade for you live. Pretty cool, right? That's pretty easy. Pretty much what we talked about, right? Triggers going up, buy a pullback, wait for a little reversal bar, get out at the fib. I mean, just that one trade, I don't even know how much that was. We could look at it. Just for our little pre-messing around here. So just the trades that we just did, and that's $2,500 worth. Just showing you how to place the orders. And look, the only place we traded from was, there's two places where we traded from. Look, and I think they make sense. Tell me if I'm off, but inside of these two circles are where we put a long trade on to get to resistance, and we put a long trade on to get to resistance. What do you guys think? And that was $2,500 worth in very, very short order. Does it make sense, though? I think it does. I wouldn't have done it if it didn't make sense, but I want you guys to say, yes, it makes sense, not me say it. I know it makes sense. All right, P, let's see what you got. Well, okay. So look, first things first. P, you have to have the same number of days on both charts for the fibs to be the same on both charts. Because if you're saying calculate the fibs on 7 days worth of data, and then you're saying calculate the fibs on 10 days worth of data, that's like saying 9 times 6 and 9 times 10 in my calculator aren't coming out the same. Why not? Well, you're putting different numbers into your calculator. So have the same number of days on both charts, and your fibs will be the same on both charts. So cool, you had a picture. That makes it a lot easier. Well, that's it. I promise. All right. Steven, let's see what you got. All right. Now, look at the difference, Steven. So, one of them is called the willy-nilly. Right? This one is going along without any Nexgen rules. You just jumped in, right, in the middle of nowhere. And then after you have a pullback to the mid-band and the rules are true, you actually had a winner. Trend trade rules are true here. And then I'm not sure what you did. I guess you got stopped out after a little down bar right there. Okay, cool. You see the difference? One of them is you just jumped in willy-nilly. Just jumped in for no reason. And then the second one is you waited for support to get hit and got in, and a lot better results. Sophia, let's see your chart. You said for each of my trades, I want to make sure I'm reading this right. Could I have put a buy stop along the way? Is that a good way instead of getting out and getting back in? Well, you have to ask yourself, why are you getting out? First of all, you know, look, for me personally, when I get in, get out, get in, get out, get in, get out, I run up so much freaking commission and I end up nickel and diming myself out of most of the money. Call me crazy. But it's better to just get in and stay in until it's time to get out and then get out and then wait for the next trade. The rest of it's just nickel and diming. You slowly lose all your money. And again, I think your trades are fine. Again, I start to question why people do things sometimes. But, again, call me crazy. But when I look at this, and tell me if I'm off base here, but you went long at red lines of resistance and one-to-ones. That's not really a long trade. That's some kind of voodoo in your head that you know. And again, is this really a trade that you're supposed to be going long at, or is that really your target? If you were long and you just got out there, I think that's the right trade. And then if that area breaks, then you can continue on. But if you go long at resistance in the outer bands and one-to-ones, you're doing so. Why? You're doing so anticipating something might happen. And there's a big difference between anticipating an area is going to break and waiting for the area to break. Do you see what I'm saying? Right here, you're like, oh shit, I got out. Let me get back in just in case it breaks. Instead of saying, let it break and then get in. And eventually, look, it did break, and then you can get back in again. All right, that's okay. Jared, can you repost anything that you want feedback on? Just post it in down here at the bottom now, new, and that way I don't have to go back and look. D, let me see what you got. All right, D. So you're jumping in short. All right. And again, look, this is what happens if you hyper focus in on a small chart. Number one, this is not the 13.2 that I put together for the NASDAQ. D. So specifically, you understand what you're doing and why you're doing it with this, right? So I don't have to explain it to you. You know this is not the slower triggers. This is the super fast trigger version. And I'm assuming that's what you want, and that's totally fine. That's not the trend trade version for the 34.5 chart. Just as long as you know what you're doing. Yeah, this is oh man, look, it might be a top. Let me jump in. And then you realize when you read all your triggers, you're going against everything. And you got out for it, which is fine. All right, so let's do chart reading again, guys, because again, chart reading is fun. We get to resistance and the triggers break above it. And we go up, but eventually we come back down. And look, this is another good example of mid-band holding. But it doesn't really matter if it holds or not until the triggers suggest that everything's going up, which they didn't until over here. So we go up, we don't make a good top, which, look, usually we end up finishing the business, which we just did just now. But after the mid-band holds the second time and the triggers roll up, we finish the business up to the top. Very, very common. And that's it for now. All right, Jared, let me take a peek. Yeah. You know, unfortunately for you, you did the right thing. It just didn't work. I mean, you did the right thing. It just didn't work. The only, again, the only downside to this, again, I think this is perfect. I think, again, look, I'm going to give you two different versions, okay? So I'm going to give you the 2-chart version, and then I'll give you the 4-chart version. So the 2-chart version is everything was going down really strong and perfect. Yes, we can all agree. And you did the perfect entry at the perfect spot. The only problem is, look, did you really have to risk 18 ticks? Because once you close above your mid-band, I mean, there's really nothing left to stop this damn thing. So I don't think you had to risk more than 8 or 10 ticks. So I think you risked way too much freaking money on this. What I'd really like is for you to recognize over here after you make this divergence up here and the small triggers roll over. You see what I'm talking about over here? Not up at the top and not down here and not down here, but after the divergence and after the fibs and after the triggers roll. Look at this over here. This is where, you get all that down and all that money, and then you wait for it to start going back up to go short. And it's like, go short when it's going down over here. These are the ones that, once you read your charts better, you'll start getting some of these earlier ones. Anyway, now, here's a question. Do you use a 21-3 chart? You have it. I'm just asking if you use it. Somewhat? All right. So if you somewhat use it, it somewhat says you have a pivot stop out. So they're good for termination conditions in areas, right? Not as much for the big trend because there's a lot that happens. But anyway, up here at the top, it kind of was leaning to the downside with this mid-band for you. And then down here at the bottom, you had a pivot stop out. But again, you didn't pay attention to it because you went short above it, but I'm just wondering if you use it or not. So at 52, you were back above your pivot stop out line at 47. The rules say once you get back above that line, probably shouldn't go short. I understand the idea of going short though, because it's still a pretty good look. I would still do it anyway. I just don't think I'd lose 18 ticks on it. And it sure as hell is easier going short over here with 3 fibs and all your triggers going down, or through your 1-to-1 with maybe even a down bar. When everything's going down, it sure is a lot easier to go short. Anyway, food for thought. I know you may not be into those types of trades yet, but once you guys really read your charts well, then, like this, reading this, that we're going to go up, to be able to start going long as quickly as possible over here is really a good idea. Or look, this is a good top, more than most likely. We'll see what happens, but all right. So, again, looking at both charts together, what do you guys think? See how this right here, Jerry, see how quickly from the top you can go short instead of, again, if you get that first one, man, that's where the easier money is, I think. Anyway, anybody get short on the NASDAQ? Curious. Post in those short trades, guys. I want to see them. All right. That's what I'm talking about. A little bit early, but hey, a good stop will fix that. Right? That's okay, G. A good stop. Now here. Why get out? Why? Other than it feels good or a preset target, why? You got to hang on for that cash on that NASDAQ. Couldn't move your targets fast enough. Set bigger targets on your ATM. Then you don't have to move them so fast. Anyway, cool stuff, right? Nice look. Everything's going down. $800. Beautiful day. All right, Sophia. All right. You got in a little low. The question is, why so low on the entry? I mean, if you got in at the 1-to-1, or I wonder why so low. Because you're supposed to get in right at resistance with the large triggers, maybe even after a down bar. So you didn't follow the rules there. You just jumped in. You got your hand caught, and then you put your stop at the best place to go short. And you knew it when it hit it, too. You're like, mother scratcher, I bet you it's going to go straight down after stopping me out. You could see the whole terrifying wrongness unfold right in front of you, huh? And you're like, mother fricker fracker, I should be going short again, but since I lost, I'm not going to. And then it goes down, and then you're pissed off, and then everything sucks. Something like that, right? Welcome to day trading. It's a fine line. One wrong entry makes for one wrong stop, which makes for missing all the money. And, look, you lost $200, right? You lost $200 instead of making $1,500. So, or maybe $400. You're trading three of them. So I had to add it up, but so $100, $300 lost versus $1,500 made. So that's an $1,800 net difference for bad entry, bad stop instead of good entry, good stop, good target. $1,800 turnaround. That's a big difference in the day on just one little mistake. It's not just losing $300. You've missed $1,500. Anyway, not trying to rub it in or anything, but just saying. We all do it. Trust me. The idea is not to do it very often. All right, guys. Chart reading. Into resistance. Again, probably going to hold. If it does and the triggers roll, there's probably one more short. And then you can say with very good confidence right now that that's a fib that's probably going to hold. Yeah. No, Jose, not yet. A lot more work to be done. So look, trade one, maybe trade two, and then obviously a bottom, short term. So no more short trades. Pretty easy to see, right? All right, guys. Hopefully by the end of next week, I'll know something, Jose. So we'll go for that. All right, guys. Chart reading. Fibs and triggers. Wait for the fibs to hold. Wait for the triggers to roll. That's the whole party. The nice thing is with the NASDAQ, you don't have to wait long. Interestingly, look, your small triggers never rolled up. So the mid band's probably going to hold, and we'll probably go back down again one more time. You see it? You can see it coming. It's not a compelling look for going up. It could go up, but it's not awesome. Right. All right, guys. Questions, comments, concerns? I know we're getting closer to noon here on a Friday, so... Yeah, if it makes it down there, that would be a good spot for a pivot stop out. If it makes it. When the small chart has divergence, that's when it'll probably go. If it doesn't have divergence, it might not. Small chart really helps out a lot, guys, when you're looking at these areas. When the small chart really agrees with what the large chart says, you really get the best of both worlds. All right, so there's your divergence on your little chart along with your small triggers down on your big chart. So we'll probably run the lows real quick. Pretty easy to see coming. Almost like you can know what's going to happen. Yeah, I'm still trying to figure out the best way to do that, D. I made it, but we haven't done anything with it yet. My brother and I have started debating some ideas. Anyway, I have it, but when I'm doing my stuff, I'm so freaking busy, and sometimes the NASDAQ goes so fast, it's like you don't have time to sit and talk about it well. You know what I mean? It's hard to sit and talk about it and do it all at the same time. So anyway, look, we made our pivot stop out, and our small triggers rolled up, so this would be a good spot for some type of momentum, high volume type trade if you had it. If something popped its head up, I would imagine. Which one gives you the most setups? Well, the NASDAQ gives you the most setups, but you have to be good at what you're doing. Like I said, that was a high volume line trade right there. Which again, look, I made this picture a while ago, but this is damn near identical to what just happened earlier. So watch. There's your high volume area trade after a pivot stop out, after the triggers roll. It's literally the exact same trade. So look, this was the high volume line trade a little while ago. This was the high volume area trade right now. They're identical. Literally, they're identical. And they both ran up to the fibs. Both of them made a pretty easy move to the upside. And it was over just as quick because, again, we hit fibs and then that was it. So, anyway, it's a very quick trade, but there's one trade to sneak out of that whole thing. And then that's it. One trade. Anyway, all right. I'm done unless you guys have